good afternoon, traders. And if we look at the board straight away and have a look at how markets are faring on the day, you can see that there is a better bid coming through Asian equities if we start in that side of the markets. The market is still taking in this positive tape that we saw on Wall Street. The idea that Trump perhaps is a little bit more concerned about market moves and equity moves specifically than what we've previously been seeing. And perhaps that gives us some sort of put or Trump put in the financial markets. The worse this gets, the more likely it is to try and make a deal or come up with some closer rhetoric. But the idea that Trump has suggested that China want to come back to the negotiation table, and there's been calls made, of course, China coming out and saying those calls were never made. But the fact is we're still, equities are still finding a better bid in these markets. You can see in the ASX 200 we're up 36 points or 35 points. Financials are putting in 11 points, healthcare putting in 6 points there. We're still stuck in this sort of 6,600, 6,400 trading range in the ASX 200. The market really doesn't know which way to turn. There's a battle going on between the bulls and the bears. I think when this does break in one of those two directions, that does need to be respected. And that's something we're seeing in the S&P as well. And if you have a look at the daily time frame, daily setup you're seeing in the S&P 500, you can see on the chart here that 29.47 has been capped at the 50-day. That's the top end of the range, going down to 28.30. We've got the 200-day moving average down at 28.03, but that hasn't been actually tested yet. But certainly that trading range 29.47, 28.30 is something that the US benchmark there seems to be oscillating around in. I think when the breaks, again, like the ASX 200, that's the kind of definition that we're looking for, a break of those range, and I think you'll probably start off a new trend, and that's something, again, that we do need to be focused on. If we have a look at Asian markets more broadly, there you can see the Japanese market and the Chinese market, the A50 being, or the CN50 being the top Chinese companies, the mainland companies, which are packaged as a futures market effectively and traded on the Singapore exchange. Those two markets are up 244 and 227 points respectively. So they're certainly putting a better bid coming through into the Asian markets, into the broader region. You can see the DAX climbing a little bit up 24 points. It's going to be interesting to see how Germany trades tonight. If you have a look at euro dollar, you can see the fact it's trading back above the 111 handle, up 2 pips, a very flat session, but the buyers are coming through, and there's really no concern about holding euro positions or euro exposure going into that GDP print, which will come out just at the open of the markets. We are seeing certainly a concern that perhaps we are going to see a contraction coming through in the German GDP numbers, about 10 basis points, so a mild contraction there. The IFO numbers we saw yesterday, of course, were very, very poor in terms of the business climate numbers coming out at the lowest level since 2012. The current assessment numbers, or the future assessment numbers, coming out at the lowest level since 2009. That's been a good precursor of German growth going forward. So we are looking at that IFO with concerns about how the ECB are going to deal with that. Obviously, if they cut the deposit rate too greatly, that could actually work counterintuitively and actually could be a headwind to growth. So we sit in the camp that when the September ECB meeting comes, we'll probably hear an announcement about quantitative easing, a change to their forward guidance, but they'll probably only cut the deposit rate by 10 basis points to take that down to negative 50. It's all eyes tonight on the US. We are keeping an eye on that US dollar index. It's starting to climb back into the top end of the range. There's been talk on the traps of a dollar scarcity issue, which should really propel the US dollar a little bit higher, but some of the data has been a bit better of late. After last night, we did see that 2.1% gain in the durable goods numbers. That saw some dollar inflows there. Obviously, we take into consideration the fact that the European data was quite poor with that German IFO number I spoke about. As we go into midnight Eastern Standard Time, the consumer confidence numbers coming out. Now, that is expected to pull back from 135 on that number, which is pretty much the highest levels we've seen since October 2018. Those numbers themselves are the highest level since 2000. So we are seeing very, very strong consumer confidence numbers in the US, which is a sign of sort of late cycle economics. If we do see this pull back to what the market's looking for around that 125, 127 level, obviously not expecting too much a reaction. If we do see a number slightly better, then of course the dollar yen will probably have a little bit of a spike up. We're likely to see that dollar index continue and move up to the top end of the range, taking in that 98 handle. And we'll probably see the fact that we've got about a 10% chance of a 50 basis point cut coming through in that September FOMC meeting, probably down towards zero. 25 basis points is fully priced in. The market's still somewhat debating whether we get 50. I guess if you look at five-year inflation swaps sitting at 191 at the moment, there's pretty much very little scope for the Federal Reserve to come out and try and get ahead of market pricing. But the dollar is something we're watching there. And I think if you're looking across the crosses, dollar yen's looking a little bit supported at the moment. But it's dollar CAD which is starting to break down. While we're seeing the dollar working against the euro a little bit, that dollar CAD is breaking down. Specifically on the 4-hour chart, you can see the CAD really starting to move up. We're also seeing what's happening in dollar CNY and dollar CNH. We saw a slightly lower than expected fix for the CNY, and that's sort of been a stabiliser for the Asian trading zone today. But it's all about consumer confidence numbers tonight in the US. If that comes out better than expected, that will give us some stability and obviously see rates being priced out there.